JSE All Share, we're up just over 1%. We're seeing quite a bit of positivity coming through from those European stocks. Asia also closing up in the green today. Does it really have to do with the fact that the FOMC was alluding to more quantitative easing in the first week of November? Or do you think that's pretty much coupled with the better than expected results out of Intel?
Helene, I think it's a combination of things. It's the confirmation that we're going to see QE2 coming through from the Fed, as well as Intel's good results, Cisco's good results, as well as Japanese machine orders coming from the East. Really a combination of things. We're seeing on our equity markets, 4 billion traded on the day. We had a fairly big day yesterday, 12.5 billion traded. So we're seeing investors more interested in the market, and the trend is pointing upwards. So investors quite interested in hoping not to miss this uptrend if we do see a continuation. So that helping volumes on the day, as well as positive global markets.
Well, Yolanda, you're talking about more investors being interested. Are you also alluding to retail investors that perhaps have been sitting on the sidelines for some time, heading back into the markets?
Yes, Eleni, we've seen our markets trading in a band since April, and not really going in any particular direction. And we're seeing a breakthrough some key technical levels that we alluded to last week, and that has really kind of perked the interest of the retail man on the street. Whether we're going to see continued interest, one can only speculate, and if we do see a continued break over these levels, then we could see our retail investors coming back into the market.
Also just touching on those Intel numbers, as we said, better than expected results. We're also expecting JP Morgan to come out with results after the closing bell today. So it's pretty much going to be about the third quarter earnings in the US. What are you expecting on that front? Do you think most investors will sit by perhaps and just wait and see what these major banks have on offer?
Yes, Eleni, we saw obviously with our market opening higher, we saw a little bit of profit taking, so we pulled back a little bit. But investors really looking to those numbers. It is the first of the 8 banks to report, and it's going to set a precedent. Expectations are, and we saw positive comments coming out from them in the last 2 weeks, that they're going to be in line or better their earnings. So investors literally just waiting to see if they do beat expectations, and then possibly look to re-enter the market again tomorrow after the results.
Well, let's touch on some economic data out in South Africa. We had retail sales slowing to 4.6% year on year in August, and that's from a revised 8% in July. It seems that most investors and economists out there had gotten it wrong. Most were expecting a number very close to that 8% mark. No surprise that we did come down, though, given the fact that the World Cup did give us a boost during the months of June and July.
Yes, Eleni, we've seen the retail sales numbers have surprised on the upside each time. So analysts hoping that the numbers or the trend would continue. Obviously disappointed in that, where Nedbank had expected those numbers to come off purely off the World Cup. We're still seeing high unemployment numbers. A lot of men on the street have lost their jobs after the World Cup. So consumers still under pressure, and it also highlights possible uncertainty about the global recovery, that perhaps consumers are moving back to a saving pattern as to and rather compared to spending.
Well, Yolanda, it's also interesting, looking at the interest rate environment in South Africa, and one only needs to speak to the investor community to get a sense of what could be happening at the next MPC meeting. Many are expecting a 50 basis point cut. Others are hoping for a 100 basis point cut. What is your view on this? And do you think that the most recent retail sales number, and also given the fact that the PMI numbers and the manufacturing numbers are starting to show that perhaps the South African economy needs a slight boost, not only from the retail perspective, but also from the corporate side?
Correct, Eleni. Those the chances of another rate cut before the end of the year are high. Nedbank's view, however, is that we're unlikely to see one before the end of the year. But like you say, those factors all really backing a view for a possible rate cut before the end of the year.
Yolanda, also touching on the rand, 682 earlier today, and that's at a 33-month high against the greenback. Of course, the dollar coming under slight pressure, more talk of quantitative easing. It's still debatable as to how much money we could see flowing into the market, but this also comes in the backdrop of perhaps China buying into more emerging market currencies, the rand being one of them perhaps down the line as well, so prompting more buying into the local currency. Your view on this, and how do you think it's going to start faring next week and the week after?
Helene, I think it's going to be quite important. We've seen a lot of activity into the rand, and we're possibly going to see a lot of flows coming in to South Africa, especially your foreign flows, and that is going to be dependent on the value of the QE2, as you've indicated earlier. And we're seeing a movement of foreigners looking for growth, and they're not really seeing it in developed markets. Emerging markets have been the forerunner in terms of earnings, and that's really where they're going to be moving or putting cash, especially if the QE2 numbers come in line or even more than what the market expects. So a lot of free cash allowing foreign investors to invest in emerging market currencies. So therefore, obviously, our commodity-based currencies we're definitely going to get the benefit of that.